Hey, Salvador Briggman here. Welcome back to the Crowdfunding Demystified YouTube channel. On this channel, I talk about everything crowdfunding, but specifically today, we're talking about how do you get funding? How do you get funding for a startup? How do you get funding for a business? How do you get funding for a new creative endeavor? And I'm gonna go through 7 ways in which you can effectively get funding in order to kind of fuel your tank. You know, if you're going on a road trip, you gotta fuel the tank. If you wanna get a rocket ship in the air, you gotta fuel the tank. You need to fuel the tank so you can have a much higher chance of success if you're trying to grow anything in this world. And that's really what I'm sharing with you and unlocking with you in a really easy way to do that. And it's coming up right after this. Okay, so let's talk about this. If you are trying to get funding for a startup, for a business, service business, or you're trying to grow some kind of a creative business in a larger way, this is gonna be applicable for you. If you're more of like an individual looking for charity fundraising, you probably should watch some of my videos on GoFundMe, or if you're looking for something more specific when it comes to like tabletops or a one-off product, you can go watch my videos on Kickstarter, Indiegogo. So today I'm really talking about building a business, because I think a business is one of the most important things for anyone to have and a knowledge of how to architect the organization, the inner workings of that, and also the groundwork for something that can grow and can scale. So number one way that I first mentioned is that you gotta start with yourself. And this is usually referred to as self-funding. It's also known as bootstrapping. There's also a term of like ramen profitable or ramen profitability, right? This is really where you as a founder, or if you have a founding team, are putting money initially into the company. Now, there are a lot of different ways in which you can do this, but there's sort of 2 that I wanna quickly outline, then we'll get into some of these other ones. First is you just deciding to put a budget into this endeavor, right? So if you're trying to make it and start a business related to your art, or trying to make a business related to a service you're providing, or a business related to a new product you're trying to make, you gotta have a budget. If you don't have a budget, you're always gonna be conflicted with spending money, because you're gonna think from a consumer standpoint. A consumer is always thinking about, do I need this? Do I really need to buy this? Is this something that I can skimp a little bit on and just get a massively cheap discount on, or just not even buy this thing? Do I really need to eat out at that restaurant, right? You can be a very conservative consumer, and you can also be spending a lot of money as a business owner. The 2 are different ways of thinking. As a business owner, whenever you're spending money, you're thinking about, will this solve a problem? What is the problem this money is gonna solve? So for me, for example, when I'm thinking about spending money related to my business, I'm always like, what problem is it solving? Would I rather solve it myself, or would I rather have someone else solve it, or rather have the software tool solve it? So you need to have a budget, because that allows you to solve lots of micro problems very, very quickly in your business. Makes a lot of sense, right? By setting aside a budget, in addition, it allows you to then go to that budget and be like, okay, we have this problem where we need to work on our social media. Can we hire someone out of that budget? Or we need to get a better camera in order to make some videos for YouTube because we're trying to become a YouTuber. Oh, okay, so we're gonna go to the budget and we're gonna see whether or not that makes sense. So it starts with you as a cash infusion from the founder or the founders of the company. Now, not a lot of people like to hear that, honestly, but that's just gonna be true. Number 2, the same point here I'm making in terms of self-funding, you don't necessarily have to just create a budget. Really smart entrepreneurs, and I'm talking about someone who's knows a little bit of what they're doing, is not just going to give money to the company in the form of charity. What they're actually gonna do, this is so sneaky, okay? They're going to actually give money to the company in the form of a loan, all right? Now, why would they do that? They would do that because in the future, if the company ever gets a round of funding, they can technically get that loan paid back, right? Or if the company ever starts generating sales, they can get that money, that loan that they have to that LLC or to that corporation or whatever it is, they can actually get that money paid back to them. So it decreases their risk. So again, entrepreneurs are smart, like they're super shrewd investors, and a lot of seasoned entrepreneurs will know what they're doing, and that's why they're giving a loan to the company. Now, they could just be, buying in when it comes to like more stock for the buying someone else's company. But I'm talking about, you're starting your own company. A lot of the times people are just gonna be lending money to the company with the expectation that it gets paid back at a certain point in time. So that's the second way of self-funding the company, particularly if you're growing a larger company, is you could offer a loan that's maybe not secured by anything necessarily to that company. Second thing would be what I call the friends, family, and fish. So this actually came from a book that I read that I really liked, and I read this years ago, was How to Get Rich by Felix Dennis, really great book. and he was talking about friends, family, and fish. I think it's just, I don't know, that stands in my mind. But it's basically angel investors, okay? So what is an angel investor? Angel investor is someone who's writing a check in your company, typically at the seed stage. It doesn't have to be at the seed stage, right? Where it's just kind of getting started. It could be the product has not yet been released to the market. There's no product market fit yet. It could be you're just kind of in the idea stage. You haven't yet come together fully when it comes to the services that you're rendering. So you're just in that early kind of stage there. And an angel investor is usually writing something like a $25,000, $50,000, $100,000 check into a company, but it could be even more. You have, super angels that are putting in $1 million checks into a company. It's really going to depend on the type of company and the angel and how that all works. And there's a lot of variation when it comes to this. So an angel investor is usually going to be friends and family, people that are tied to the founder themselves, or an accredited external investor. An accredited investor is someone who has a certain net worth and also has a certain level of income every single year. I wrote down the specs, but I mean, honestly, I'd rather just get into some of these other topics before getting into like accredited investor. I have another video as well on accredited investors, but basically think of it as like a high net worth individual. So this could be like a doctor, a lawyer. This could be someone who just has a lot of money. They're a previous successful business owner. When I was an intern at George Washington University, I was working at this startup company called Loyal Curve, and they since closed down over the years. But the founder actually got an angel investment check for $50,000 from a local business owner, and he was just telling him his idea, and he got the guy excited about it. So you, as a founder, can do what's called a seed stage round of investment, and you can go out there and you can network with angel investors, and you can get people excited about this idea, and they can become one of the first people potentially to write a check into your business. Now you need to know about the business model, you need to know about your vision, and you have to communicate that in these different things, but it is 100% possible. People do it every single day, right? So angel investment is the second thing that I want to mention, as well as family and friends, and really treating them like investors, not like they're getting money for charity. They are probably investing under a certain type of investment contract, right? So maybe they're investing in terms of preferred stock. Maybe they're investing in terms of a convertible note, which converts into equity at a future point in time. Or you haven't yet priced the actual shares yet, right? So it's at a future price round or a future date there. It's gonna vary, but that is gonna be the second one that I wanna mention here, is angel investment as the next way to get funding for your startup, your business, or what you're trying to grow. Number 3 is the big boys, the sharks, which is venture capital, okay? Now we think about Shark Tank, like that show Shark Tank. I'm sure you might watch Shark Tank, right? And that show is all about angel investors putting in money. Those are not VCs. Mark Cuban and et cetera are not VCs. They're individual investors, they're angel investors, they're sharks. But in reality, the sharks are actually the venture capitalists. The way the venture capital business works is that these people don't necessarily invest their own money, though they could. If they're a partner in the firm, they might have their own money right into some of these deals and stuff like that. But typically, they are investing other people's money, right? So they maybe have a bunch of different wealthy clients, and they are investing their money into more risky startup investments in the form of venture capital, right? So these individuals are basically looking at different deals, and they're deciding whether or not they want to invest in it. And their business model is based on the fact that typically, if they're going to invest in 10 companies, only one of those companies is going to really hit it big and make the big ROI for their portfolio. So for every Uber, right, which will be a massive ROI, they have all these other little duds, and like a lot of them go nowhere, a lot of them lose money and just kind of skate by. So they're really just looking for winners, what can be a very big company. Otherwise, it's not going to make sense for them as an investor in order to get a return. They're trying to get, remember, returns for their investors. So they're looking at your deal and they're like, can this be a big company in a big marketplace that's able to scale over time so that they can get a massive return? This is why typically venture capitalists don't usually invest in like service-based businesses or small mom and pop businesses, because there's just no way they can get a return for their investors. So they're not willing to waste their time looking at that. But depending on the type of business you have, you may or may not fit into the category of seeking venture capital for your business. Number 4, the number 4 way in order to get something off the ground is to use crowdfunding. And this is what I built my entire career on. I built my entire career on crowdfunding. I got started in the industry in 2012. And for me, I've written a bunch of different books about crowdfunding, nonprofit fundraising. I've talked about equity crowdfunding. I've talked about Kickstarter launch formula, my book there. Got a lot of crowdfunding personal expenses, right? So I got a lot of different books on crowdfunding. And that's really what my specialty is understanding how that works. And with crowdfunding, you are either raising money, we'll just say with a rewards-based crowdfunding campaign, it's called. And that's where someone goes on Kickstarter or Indiegogo, and they see that you're releasing a new product or something into the marketplace, and they decide to become a backer of your Kickstarter or Indiegogo campaign, and they're basically pre-ordering it, okay? So you could do an app, you could do anything that you want to when it comes to Kickstarter, Indiegogo, and people are basically, when they become a backer, they were pre-ordering that they will be able to participate this in the future. And usually they're kind of more interested in like creative stuff a little bit, or seeing the process as it comes together. But you kind of want to think of those people as like pre-ordering, right? Kickstarter, Indiegogo. You then have other types of crowdfunding. So you then also have what's called investment or equity crowdfunding, okay? Equity crowdfunding, you can think of websites like Start Engine, WeFunder, Seed Invest. There are a lot of different equity crowdfunding websites that are out there. Republic.co, right? Equity crowdfunding, at least in the United States, you can raise money under what's called the Jobs Act, the Title III of the Jobs Act, which is regulation crowdfunding. And you can raise a certain amount of money over a certain period of time and basically get non-accredited investors interested in your business and accept investment capital from around the world. Why is this a big deal? This is a big deal because before 2012 and then 2015, when it was more so enacted, this was not capable of, you couldn't do it. So this is like a new thing basically. So you can use this tool of equity crowdfunding in order to get investment capital for your business. And those people that are investing typically are investing at a stage that is before what's called a priced round. So I know this, we're getting a little bit into the weeds here with technicality, but at a certain point in time, your business is going to be evaluated and you're going to have a certain price for the shares that you're offering. Usually with equity crowdfunding, for like a crowd save, for example, when it comes to WeFunder, they're investing before that period happens. So they are betting on the fact that in the future, what they're investing at is going to be worth more in the future, right? And all the voting power is directed into one SPV, which then, obviously the person who is the lead investor, the person who is managing that, directs that voting power. Okay, so that gets a little bit more in the complicated or beyond just the surface level of this video, but just know that you can raise money on WeFunder, Start Engine, and sites like that with investment capital from real people around the world, and they can just be putting in like $250 or $500 into your company. And I've documented cases in my podcast of people raising $500,000, $1 million plus. I had a drone guy who invented a new way basically to deliver packages using drones, raising millions of dollars on WeFunder, right? So you can go listen to my episodes on my podcast, but this is 100% another way in order to raise money. Want to take all the stress out of fulfilling your Kickstarter rewards? Fulfillrite is the turnkey solution that puts product delivery on autopilot. The Top Campaigns uses trusted high-tech provider to store, package, and ship their products. Focus on growing your business. Leave shipping to the experts. Don't wait. Get a custom quote from Fulfillrite today. Link in the description. So it's actually point 4 and 5 that I wrote down here, but I want to just go through 2 more here. I want to be mindful of your time. So number 6 is going to be basically what I call a revenue-based organic approach. Okay, this is how obviously I build my business, but also I think it's a lot more healthy of an approach. You have a lot of companies out there like Basecamp, for example, taking this approach, but this is more of an approach for you if you're not interested in having investors be a part of your company. Now, why would you not want investors as part of your company? Investors are amazing, right? Well, in some cases they are, right? They bring a lot of clout, they bring connections, they bring funding, which is incredible. However, at the same time, when you got investors, it's kind of like you got bosses, right? You got to report to these people. You have to be aware of, you have certain fiduciary duties and certain financial obligations and like all of those things. And you have to make sure that they get an ROI. So that you have to be on a certain path in order to deliver an ROI to that investor. So you don't have the full say, basically. You don't have the full say over your business, obviously, because you have other people who are partial owners in your business. So you might not be interested in that. And if that's the case, probably the other best route for you to go to expand and to grow this business is number 1 would be pre-orders and pre-sales, okay? So this is basically where you're coming out with an idea or a product of some kind, and before you really have the full thing together, you decide to do pre-orders and pre-sales. Now, I actually think that Kickstarter works really well for this. However, in some other cases, if you're doing another type of company or more of like a software company and you don't want to use it, you could also do it on your own website. And by that way, you could have a massive list of people that are just waiting to enter like the beta, or waiting to pay for it, or waiting to have that initial transaction happen, maybe at a really discounted rate. You get a bunch of funding then, and then you are off to the races. So a lot of the times, more infotainment entrepreneurs, if releasing a course, for example, might do something like that. That's actually very common in that industry. So you can use sales or pre-sales in order to actually get funding necessary to then complete that finished transaction and deliver the product or the service to them. This is 100% possible. Usually it's done through Kickstarter, Indiegogo, but you could also do it on your own website. The other thing that I kind of want to mention here is when it comes to this, right, you can also reinvest the revenue that you're making into the business. And this is probably one of the easiest ways to just start growing the company over time. So once you start making money, you start generating revenue, you have a very big, I would say, desire that most people have just to take the money out of the company and pay themselves. It's so hard. It takes time, obviously, to develop that discipline. But if you keep the money in the company and you just reinvest it, that's another source of turning over those dollars. And over time, you start to build this little snowball where you're making more money, then you're spending more money on marketing and ads, maybe bringing in more money, spending more money on marketing and ads, bringing in more revenue, spending more money. You're going to grow the company that way over time. And it can be a great way to just bootstrap the heck out of that startup company. So the last one I want to mention here and has to do with basically securing a obligation over time. Okay, so we think of obligations. Obligations are things you have to pay back, like a note, right? If you own like a house, you got a mortgage. If you have like a company, you maybe have an obligation to create some kind of a return for an investor in the future. What's another form of an obligation is a contract, right? So one of the easy ways for a beginning entrepreneur, a beginning business owner to get started is to secure a larger contract, okay? Now I know this sounds a little bit different, but hear me out here. Let's just say that you have a certain software tool, right? And you're trying to really get this thing off the ground more and more, and you have something that's working that you can demonstrate. You can take that to a larger company and you can try to secure a contract. So a contract for delivery of services or a contract for a certain period of time. This is actually how a lot of ad agencies and marketing agencies get started, is that they're able to win a really big contract from a particular brand, which then brings in a lot of money, which they can then funnel throughout the business, and they can use that to begin to start the business. So this is kind of similar to point number 6, which is like using sales and pre-order, but there is definitely a different approach to approaching larger businesses, saying, hey, looking, or going through that whole process of enterprise sales of getting a larger contract, so you can then have the funds and resources necessary to then go and hire the people and to funnel that through your organization, to build your organization. And there's a little bit of a chicken and an egg kind of scenario here too, where like you're a little bit probably overstating what your operations are, honestly, but it's 100% done every single day. People are going out there and they're overstating. So I think this really is one of the points I wanted to include last as a way to inject funding into your business so you can grow it quickly and you can really get this thing off to the races and off the ground. So if you found this to be useful or helpful for you, number one, you should definitely book a coaching call with me, because I can more easily dial this in directly into your specific situation. So you can go to crowdcrux.com/coaching, crowdcrux.com/coaching, book a one-on-one coaching call, intensive session with me there, and also some homework and action items. We can go step by step through what you got to do next if you really want to get your idea off the ground. But more often than not, a lot of people just want to know, honestly, do they have a good idea? So I also obviously share my own thoughts on that, and also how to validate your business idea or your product idea or whatever it is that you're trying to come out with. There's a lot of proven easy ways in which you can do that. But I hope that you enjoyed today's video. Thank you so much for tuning in. My name is Salvador Briggman. Hope you enjoyed this, and check out some other videos we got there in the channel. Give me a thumbs up, come subscribe for more content just like this. Love to see members of the community that are tuning into more and more of my videos. So thank you so much. And again, my name is Sal. I'll see you next time.